Happy Thursday, Pat. We are back.
Happy birthday, or happy Thursday, happy birthday, happy Thursday. I got my draft day.
I don't need another birthday. God knows.
Got my sister sent me this from Green Bay for Christmas. So
NFL draft. So cool. Yep. Well, you got to share this news, Pat. Our channel here today, 2 million views achieved on April 20th. How about that, huh?
Pretty amazing. The millions of viewers. So we do have millions of viewers, really.
We do. We have millions and millions of viewers. And I asked ChatGPT this week, who are the top YouTubers for Arizona real estate? And my channel showed up like they highlighted it like number 3. But then so I asked, who's got the top live stream? And we are, according to ChatGPT, and they just may be yanking my chain, they rate us as the number 1 live stream for Phoenix real estate. It was a really good write-up. It's interesting. They spit all this stuff out. And I thought, okay, I'll take that. So it's kind of fun. But, I got to put our banner up here. I got to show what the numbers are here today. So mortgage rate 6.94. Listings are up to 26,265, and they continue to climb. Now, this chart looks really alarming, doesn't it?
Yeah.
Until it's just kind of how it's formatted. If I add in 2024, it's not that bad. 23. And then I compare it to pre-pandemic levels, which is 2019, which is the green one here. We are now higher than where we were sitting at 2019, and it's continuing to go up. Now this week, contracts dropped down to about 2,880, and it's because of Easter. It's really nothing more than that, and the new listings kind of went, we got a greetings from Sedona. I want to get up there very soon. This is the time of year to get up to Sedona. Yeah, showing this chart because they're showing 3.4 months of supply. And again, I thought, well, where are we at pre-pandemic levels? And guess what? We were 3.3. So here's the silly season down here. Half a month of supply, 0.4.
That was during the pandemic, right?
That was the problem. Well, 2021.
2021.
Yeah. And 2022, a half a month. And so we're sitting down there with only 4,800 homes, and we were writing 4,900 contracts. So that's why all the values went screaming up. It's nothing more than that. It isn't institutional buyers. It is just, there just wasn't enough out there. People were grabbing them. They wanted to get out of there. You're living in this nice luxury apartment, right? Now, all of a sudden, you can't use the gym. You can't use the clubhouse. They won't let you swim in the swimming pool. And it's like, okay, well, rates are down. I'm going to go get a house. I mean, why am I paying for this? And that's what we saw. Yep. And I don't know if you've been following. I did a video last night on Open Door, and then I saw another video by a real estate brokerage called Zudilio, talking about today that Open Door stock plummeted even further today. It's down to 77 cents. And I thought it was like $40 at one time, but it was like $25 to $28, but 77 cents. And that's a big change from yesterday. I mean, who dumped them? So I'm looking at who actually are the top institutional holders. And number 1 is the Vanguard Group with 11.8 holdings. And then behind them is BlackRock at 7%. And everybody else is down in the 2s, T. Rowe Price, Renaissance Technology. So somebody, just decided to dump a lot of their shares, I think, this morning, because they've got this new approach now, which I think it makes your head shake. They go, well, we're going to take the approach where we're going to buy houses on Q4 and Q1 because that's when you can get better deals on prices. Then we're going to sell them in the spring. Well, here we are reporting that our average sales now, our average close price is down 3.8% in the spring. So they're going to get slapped in the rear end again. And they only have 200 homes in our market right now. They hold $2.2 billion of inventory of homes. So what do you think's going to happen? Do you think they're just going to file for bankruptcy? Or do you think somebody will buy them out like Zillow?
I haven't really been following it, so I couldn't really tell you. But I mean, what value would that bring to Zillow? Would they
I don't
bring?
know.
I mean,
What
that's a,
value did Redfin bring to Rocket Mortgage?
yeah. I mean, these companies are trying to corner the market in terms of their market Redfin, but you get Redfin agents that would be referring basically to Rocket, and there's a lot of agents out there. No, well, I shouldn't even say this, but there's a lot of agents that are like, hey, if it's a Rocket, I need another prequal.
Yeah,
So
yeah, I get that. I
I mean, I'm
But
stating
Redfin's
facts.
only prevalent in the West Coast. They're not big anywhere else around the country.
Yeah. I mean, the open door. I mean, it seems like the model hasn't worked. I mean, they're trying to automate everything in the real estate market, but there's a lot of things that I just haven't been able to been automated because it's still human emotion
Yeah,
involved in it.
it's they're trying to tie everything together, and then you've got all these rules and regs where they tell you we're supposed to use their title company, and as an agent, I can't
Well, that's
tell
a,
you that you have to use a certain title company. I'll get slapped.
well, that's the
Um,
thing. If you get tied to some company, some big company, I'm just going to reference one of our viewers, Ryan. Um, he did a, I did a loan for him back, and then he did a refinance. Freedom called them. They basically called them from the call center, and they're a big company. And I'm just going to state facts. I mean, he just said, he goes, it was just a horrendous process. He goes, the call center. He goes, I got stuck in call center hell. And my point being, these companies are trying to buy up all these companies to try to automate, and and he couldn't get a hold of anybody. It took him like 60, 90 days to close a refi. So if I'm not mistaken, what he said. And these companies are getting bigger and bigger, acquiring companies to try to automate and become bigger. Bigger isn't always better. I mean, with myself, I mean, people with myself, you can call me at 7:00, 8:00 at night with these call centers. They're gone, at 6:00 or 7. So it's just, these companies are trying to get bigger, but I don't know bigger is better in the real estate market.
well, I was in Rocket Mortgage's office in Phoenix, and I couldn't believe it's just nothing but cubicles, just unbelievable. Phones ringing like crazy. And so, but you never know who you're going to get and how long they're going to stay there. Saw some new construction numbers come across nationally showing that completed new single family houses for sale are back at a level that we saw around 2006. Of course, this is the big spike up in building, but it's kind of leveling off a little bit now. Publicly traded home builders have been shedding some light on how they're dealing with this market, and their shares have zigzagged down from their highs in September. D.R. Horton down 36%, Lennar down 39%, KB Homes down 40%, and Pulte Group down 32%. And it says here, Lennar is an example of a builder choosing lower prices and bigger incentives to increase sales. Now, I got an email from Lennar just before the show today. I wanted to share. Look at this. Home of incredible value, right? Promotional FHA fixed rate of 3.75, 4.59 APR available, $300,000 sales price, monthly payment of $1,731. Okay, I thought, wow, $300,000 sales price. So they sent me a list of available homes. Where's the $300,000 homes? Well, there's two. And they're 2 bedrooms. One's 277 and one's 298. The rest are all 400 to 700,000. It's like, so
Yeah.
I got the teaser email. Looked great. All right, let's go. They're finally building $300,000 homes. And you look and go, well, no, they're not. So I
Yeah.
just thought that was very interesting. And I go and I look at us here, and I take a look at this is Zillow sales here. I didn't know they were even selling homes, but they sold one. Here's open door sales in Greater Phoenix. It says here they've sold 58. They were in their heyday back here selling a bunch of them, 2021 and 2022.
How many is a bunch? What's that number?
A bunch is more than a smidge.
Okay.
So you got, it's my job to stay up on that stuff. So now I look at building permits, single family building permits, annual counts. And this is where we are in Phoenix. So 2025, our permits are way down here. So they are backing off as far as permits, according to the tax records. Now, you'll see a permit pulled here in 2023. Those houses finished at the end of 2024. So there's a lot of inventory coming on in 2025 right now. And so we don't have anything that's really spiking up and alarming. But nationally, that article is saying that builders have about a 9-month supply of homes on the market. That's a lot.
Yeah. Yeah.
Well, I just showed you that we were 3.3, but rates. Now I'm going to pop this over to you here, but there's just nothing going on, either up or down, is there?
Well, yes and no. I mean, the outlook, the outlook for rates has been more volatile. It's just been very volatile, probably now more than ever. I mean, you can see right now, this is the last 5 days where this is the bond opening market. Look at these moves that they're having, like on a daily, right at the open. This is like when the market opens up, not when the bond market opens up, but this is pre-trading. And then right about here is when the bond market opens up at 11 our time. But, you see it'll have this crazy, look at these gaps right here. And then it moved down yesterday. Today it made a rally. So, I mean, you look overall, I mean, it's been some gaps in the morning. And the problem is it's been day to day with this Trump, and it's tariffs. I mean, basically the market's been reacting to every post that he does. And there's, I'm getting frustrated. I mean, just with what they're doing, just every day, it's a knee-jerk reaction to this tariffs and what they're doing today, what they're doing tomorrow. I mean, a lot of people, but in essence, you cut out the noise, right? This is a 3-day or the 3-month 5.5% coupon, the prices right here. And you can see this is 3 months. Okay, for all this noise, let's just draw a line from here. This is basically 3 months ago to about here. The bonds really haven't changed that much. But in the meantime, you see these, these gyrations. These are prices. So when prices go down, rates go, when prices go down, rates go up. So this, rates got beaten up that one right in here after April 4, Friday. Over the weekend, it came out, and then you see this big downward move Monday, and that was just the week of April 7th, 8th, 9th, 10th, 11th. They just got beaten up. Now we're starting to see some more normalization to the market. But you look at the 10-year, this is going back since about April or October of 22. I mean, we've been kind of stuck in this channel. We've had some violent moves week to week. And, but overall, I mean, if you see rates, I'm not going to pull up my rate chart today, but we're at about 6 7/8, 6 3/4, 6 3/4, 6 7/8 right now. So it hasn't, as much as the news has been coming out, you ask 10, economic experts, and you're going to get 10 different answers about these tariffs.
Yeah. I just let it go in one ear and out the other now.
Yeah, this tariff stuff is kind of getting old, and I just think there's a lot of noise out there that basically, it's just confusing a lot of people. My overall take, just my gut says all this noise is basically just paralyzing everybody. It's going to slow the economy down, and we're going to go into
it didn't surprise no one here. He says, "Mwaha, you were warned." I told you guys it's a very simple calculation. Okay.
Yeah. I mean,
I read a comment yesterday.
I don't calculate anything. I look at psychology. The psychology basic. You can look at all the numbers you want. You can look at this tariff number. You can look at this. Bottom line is it's causing paralysis in the market. If you're a business owner, do you want to be doing anything right now? I mean, I don't know what we're missing. I mean, but
Yeah, I
anyway,
mean, why don't you clarify that? I mean, somebody
yeah,
accused
tell
me
me
of
what
being
we're missing. I mean,
somebody accused me of being a cheerleader early on, when things are really hot. You realtors are just cheerleaders because you want more commissions. Let's go back to 2021 when we were on here. Inventory was painfully low and
yeah,
prices were going up. And we were saying, as long as we're in this situation, prices are going to go up. We're
yep,
not going to see prices come down until there's a change in the dynamics in inventory. And that's what we're seeing right now. And that's what we're showing. We're showing that Cromford Market Index on inventory is going up and demand is flat. It's not going down. It's flat. Um, so it's
so far,
solely 100% affordability. I agree.
yeah, I
Um,
totally agree. I
I
agree with
agree.
that.
I do get the macro, and but here's the deal. Um, Seattle prices are up 5% this past month. They're way more unaffordable than we are. Rochester, New York is up. Boston is up. The
Well,
Midwest is up.
California was up actually.
Yeah.
I
And it
mean,
is
so
affordability compared
California's
to
been
income.
unaffordable for the last 30 years.
Yeah. But this guy has a different component outside of affordability, and that is anxiety.
Yeah,
And so that's pretty macro. I mean,
yeah.
people there was a survey came out. This one kills me. Um, Zillow did this and it's national lead and lag. So this is a national one. And this tells you why um, some people were pricing too high. Look at this. Many potential sellers think it's a good time to sell a home. This was 60 days ago because of the increased value of their homes and limited inventory available. High demand, low inventory, raising property values. There are not many homes on the market currently in the area in which I live, so it's a seller's market right now. Many markets are still experiencing strong home values, meaning you could get top dollar. So interest rates dropped a little, and springtime is a great time to sell. So they were all basing this on what they were reading, seeing, and being told, and saying, "Well, here comes spring." Well, spring came, saw, went, and it nothing happened. In December, I was saying this is going to be a slow spring. There
Yeah.
are people saying that the spring is going to take off, and I don't agree. And
Yeah,
here's
we
why:
both said
because
that. Yeah.
I don't see a catalyst. Remember that?
Yeah, we both, yep.
And so no one said sellers are smart. A lot of sellers are smart, and some of them are having very good success. It just takes, you just mentioned here, lead lag. It takes time. It takes time to know, unless you're doing this every day and adding up the numbers, it
Well,
takes time to understand what's going on in the market.
well,
3 months
real estate
here,
though, real
3 months.
estate, real estate, you have to figure out, you have to be smarter in stocks and bonds. Real estate sales and buys are also triggered by death, divorce, job moves, everything else. You're not, whether you're smart or not, because you got a divorce doesn't mean you have to sell or buy. That's basically triggered, that kind of rolls into that equation. Now, if you're stocks, you're buying and trading stocks, yeah, it does take a little bit more, but real estate is more, you know, family, incident based as far as what's going on with your
Yeah, yeah.
situation. So
Phoenix inventory is going up quickly. It isn't going up alarmingly. It's going up to between 300 and 500 homes per week. And what's making the inventory go up is not that we're having more homes thrown out there. Because I mean, look, I got a mess here. This is what I look at on a daily basis. And I don't expect anybody to see it. But I'm going to say we were averaging about 35 to 3,600 homes being added to the market. Okay. Now we're down to an average of 3,400 homes being added to the market. So it's starting to tamp down a little bit. I'm not going to talk about the past few entries because
yeah,
Easter messed that up. But then I subtract from that, I add back how many new listings came on and back on the market number. That has not budged. That's staying right there. The canceleds have not budged. They've been in between the 600 and 700 home range week after week after week. Expireds, which I thought were going to spike April 1st, did not. They might. I'm waiting to see that, but they're still hanging around 250. And then new contracts have been looking at about 2,000 every 7 days. So it's the lack of new contracts versus the number of homes coming on that's making the new listing count grow. In other words, this 7-day moving average is showing that we're short by about 287 homes. They put these homes out there. Our contracts didn't quite meet the bar. That's why I have a contract ratio of 91%. So if that was 105%, that's pricing pressure on the upside, no matter how you shake it out. So one of two things has to happen. Either sellers are just going to say, well, it's not looking good, I'm not putting the house on the market this year, or they're going to say, I'm going to let this expire. So I don't see anything, even on the macro level right now, as people are shouting that we're going to have a recession and things are really going to be bad. I go back and I look at things like today that says Google beats Q1 estimates, raises dividend 5% and authorized $70 billion in buybacks. They're having a good year so far. Sunbelt Homes for Sale is higher than the GFC. Some of these new builds are doing really well. In short, real estate through SRS Arizona is not a seller's market. The corps are starting to tell rental inventory saturating sellers. Got a rental story for you. Totally agree. It's buyers and going to get way worse.
We'll
See.
You know,
I can't predict where the buyers are going to be.
Huh?
I can't predict where buyers are going to be. It's
going
to be a slow summer.
In her report last week, she said it's turned into a buyer's market. I mean, it's definitely shifting that way, dropping. You know, prices aren't plummeting, but they're just gliding down. They're softening, so it is more of a buyer's market.
Helping a young man try to find a rental, just a 1-bedroom apartment condo like Tempe, Chandler, Gilbert. You wouldn't believe we went to this one. It was in Tempe. Okay. And it says, there was $1,000 deposit, $1,200, it was $1,200 base rent. So you had $1,000 deposit, but then there was $1,200 first and last. There was a $600 damage deposit, a $600 pet deposit. He's got a cat, and a $60 a month addition because he has a pet. And yeah, $100 for Wi-Fi. And I said, what's that? She goes, all the units come with Cox Wi-Fi. And I said, well, can we choose to have another provider? No. Yeah. Added everything up to get into this place, a rental, $3,500. $3,500. And then I saw some more, and they have like $180 admin fee, an application fee, an administrative fee. It's like you look at the base rent and go, okay, this is doable. Well, you gotta pony up a bunch of money to get into a damn rental now.
Well, based on the amount of rentals I see being built around Chandler and Gilbert, just a matter of there's gonna be an oversupply.
There has to be. I mean, I asked one lady, I said, what is your vacancy rate? She goes, well, I just got here, but I think we're at 90%. Well, 10% vacancy rate's not that good.
No.
Especially near ASU.
Jesus.
But again, what we're not seeing is prices coming down. We're seeing things like first month free, no application fee. They're tweaking it with little things.
Yep.
But they're not making any major moves yet. But man, oh man, I couldn't believe the add-ons, and especially, I don't know, the cable thing just bugged me.
Yeah.
It's $100. Okay. Cox. Can I get Verizon for 25? No, you didn't have a choice. You're going to have Wi-Fi and it's going to be $100.
Yeah.
Okay. We'll keep looking. Not that Wi-Fi was the decision maker, but geez, really?
Yeah.
Now, are there any economic things coming out next week, Pat?
Next week we've got
tariff BS.
Huh?
Besides the tariff BS.
Well, Monday we got the tariff report. Tuesday we got the tariff report. Wednesday we got the tariff report. Thursday we got the tariff report, and Friday.
Okay. Yeah. So
does that sum it up? Jesus, I swear to God,
Sunday we will have tariff analysis.
Huh?
Sunday we will have tariff analysis. In fact, we gotta come up with a catchphrase for that.
Yeah.
Tariff analysis. Tariff.
Well, this market has been constipated, basically. I mean, it's just constipated right now. I mean, next week you got the ADP. I mean, you got core PCE numbers coming out month on month. Core PCE inflation on Wednesday. You got the GDP. GDP is gonna be interesting. Obviously, see what happens there. Thursday, you've got nothing. Not ISM. That's the ISM. Some of these numbers will probably start popping up because obviously they're going to probably start taking a look at these numbers as far as what's going on with the tariff. I mean, who knows? Obviously, it's 1 month that we've been talking about the tariffs, but those numbers are going to probably start flowing into all these numbers. So,
well, it's nobody knows. I mean, like I said, no matter what channel you go to, I just have to. I just listen to it and go, okay, talk to me in 6 months.
Yeah, I mean, it's overall, I mean, the market, like you said, the rates seem like they're got kind of this channel that they're stuck in, high sixes. If things do slow down, I mean, what the Feds do, now they're talking about the Feds cutting 2, 3, 4 times. Really, you have to watch a 10-year, you just have to watch a 10-year treasury. That's going to tell you exactly behind the scenes of what's going on behind the scenes. Because what the Feds do, every time they do something, the 10-year treasury acts opposite. It'll give you signs of what is brewing. And but I think overall, my gut is that all this news is just paralyzing a lot of decision making, and it's going to roll downhill. Well, my simple-minded analysis.
Well, we are the simpletons here. That's our goal. I read that write up on ChatGPT that was rating us as the #1 real estate live stream for Arizona. I thought, wow, pretty soon we're going to have to figure out what we're talking about. You just can't wing it. Down the road, Pat, we're not going to be able to wing it anymore. Yeah. I might have to put a tie on. So we had a question: what role do you see credit scores playing in this downturn? Lots of supposedly prime borrowers suddenly take 150 points because the student loans finally caught up to them.
It's going to probably be an issue. I mean, I haven't seen it. I haven't heard about it. I haven't seen anybody on, like some of these posts, Facebook, I follow different, new media outlets and stuff like that, but I haven't seen it. But it probably will have an effect because now obviously these people are, they're going to start reporting late, which is kind of asinine. Excuse my French, but I just think it's what they're doing. They've got to come, they're coming out with a pretty tough saying you've got to pay, which I get it, but, you have to work with some of these people. They've been, you can't just throw them back into the shark-infested waters right away and say, okay. I mean, I don't know if it's going to affect if you're not paying, you got student loans, you're looking to buy a house. Yeah, it certainly could have an effect, which people have to be cognizant. They got to take responsibility of and look at what they've got in terms of debt and see where they're at, because it will have an effect.
Well, here's listings under contract, and we're going to trend down anyway because we do as we get closer to. I mean, this is our peak right here, right?
Yeah.
And so we are right at last year. I mean, we followed week after week, identical to last year. So downturn coming, yeah. Seasonally, we're going to have a downturn. Which I find is interesting because remember I said that Open Door was going to have a policy of buying in Q1 and in Q4, and then they were going to sell during the strong spring season. Well, they've missed it. This is it. And it's going to be downhill from there as far as listings under contract. Now, the thing to watch is, and we'll just have to watch the numbers. I have no idea where it's going to go. Are we going to see inventory start to follow the same seasonal pattern where it starts to slow down? And we've got a comment here: student loans and defaults start going to collection next week. That's 5 million people potentially about to get a terrible black mark on their credit, take them out of the market. I think a lot of people in that category too were probably holding off thinking that was coming. So I'm not sure of how many of them are going to be knocked out of the market because maybe they weren't trying to get in anyway. And that's why they're renting. It's just another thing to watch. Is it?
Yeah, I mean, it's going to be something that develops. I mean, it's a real topic to talk about. I mean, no doubt about it. I mean, it's an individual responsibility to check in on that as far as what it's going to be something to watch. I mean, it's not.
Yeah.
It definitely is going to be an issue, no doubt. I mean, but
Well, we'll stay on top of it. Well, Pat, I'm going to tell the viewers here, we're going to have to cut this a little bit short because I know you're working on one of your favorite topics, which is condo
Yeah.
certification, and they're not making it any easier. So I'm going to let you get to that before we end up running out of time here. And tell everybody I'll have something coming out, I think, again on Sunday night, just kind of recapping the week. But we're going to watch next week. We'll be on the week after next. But
Hey, jump in. Let's essay this one question. What are good incentives for a seller to offer in a buyer's market? I mean,
well, half of sellers right now are simply offering an average of $9,000 to $10,000 in seller concessions, offering to either pay down the rate or pay all their closing costs. It really, the best incentive is a good price. And sellers, if they have that huge optimism that they think things are good, like in the first of the year, then you end up with time on the market. Now, I'm under contract on a nice house in Ahwatukee, and we didn't offer them the asking price, and we had a few back and forths on the phone. But I mean, they threw in the washer and dryer, which these were nice units. It's probably $3,000 worth of equipment. They said, we're leaving that. They're leaving the play center that's out there. It's got this beautiful play center. They were leaving stuff that was very important to my clients that they would hope they could get. And they agreed to our price, and they agreed to split closing costs with us and go in and help with a home warranty. So it's the back and forth between the agents trying to find out what works for the buyer and what works for the seller. And if the seller's dug in like a tick, then no. But it was Caitlin last week that said that she had a seller that she's representing, and the buyers went to them with the buyer inspection report results, and they asked for a pretty decent list of things they wanted repairs. And the seller said no, and the buyer goes, okay, well, I got another house I'm going to go look at. So you better be willing to pony up if they want, repairs made, because they got a plan B.
Yeah, the market shift. I mean, we don't have, we're not in a market where there's only 3,000 homes on the people have gotten more used to inventory now. So it's,
yeah, they're not in a hurry. They don't have to be.
Yeah.
You get to think about it, and you look at that house and you go, well, there's two more.
Yeah.
Okay.
That's what people have to realize. The market shifts. It shifts very subtly before the buyers or the sellers know what's going on, and kind of this rolling of information. And that's why it takes people 3 to 6 months to kind of shift their mentality and their sentiment. But I mean, people have to, look in here and see what's really going on, and it's rolled over. There's more inventory, and people can say, okay, I've got 10 other homes I'm going to look at,
Yeah, you're going to have to be the competitive one. So
yeah.
Well, Pat, good luck with that file today, and I hope
you.
things get resolved. And thank you for the millions and millions of viewers that were on today. I appreciate it. And we will see you again in 2 weeks. I will be on several times next week. Pat will be back week after that. Take care, everybody.
All right, take care.